Welcome to Ransquawk's morning briefing for the 23rd of September. Taking a quick look around the markets now, 10:30 just gone in London. First of all, just a recap of the overnight news story, starting off with some global news from IMS member Strauss-Kahn, who says toxic assets still clogging banks' balance sheets. Strauss-Kahn says it's too early to say the crisis is behind us, and says double-dip recession is possible but not likely, and that it is much too early to begin exit strategies. Obviously, taking note of those comments heading into the G20 summit in Pittsburgh, due to begin tomorrow and conclude on Friday. Elsewhere from the US, probably something that will get a bit more of attention in terms of when the US players come into the market, is a story on Bloomberg in regards to the Fed, saying to start talks with dealers, as the primary dealers, on reversing or using reverse repos. Central bank officials are discussing plans to use so-called reverse repurchase agreements to drain some of the $1 trillion they pumped into the economy. There's no sense that policymakers intend to withdraw funds anytime soon, though, according to people familiar with the situation, with central bankers' challenge is to decrease the cash without stunning the economic recovery before it could potentially spark any inflation. Casting your mind back, Fed Chairman Bernanke did say in July's Wall Street Journal opinion article that reverse repos are one tool to accomplish that goal without raising interest rates. So something that, as mentioned, will probably get some attention at Bloomberg article when the US come in. Elsewhere, the US Treasury Secretary Geithner, he said overnight after the market closed that the US economy appeared to be picking up steam, and G20 leaders gathering in Pittsburgh this week would strive to ensure recovery was balanced. Geithner also said in a testimony prepared for delivery today he is due to speak in Congress at 2:30 this afternoon London time. In those remarks that the United States would not identify in advance financial firms that it views as systemically important. Elsewhere as well for the UK markets, worth noting from the Times newspaper and across most of the major wires, the updates, the latest economic forecast from the CBI. The Times running the headline, the CBI forecasting interest rates will reach 2% next year. They're saying that they'll start to raise interest rates next spring and could be at 2% by the end of next year. Central bank will need room to act in the coming months if inflationary pressures become a worry. And the CBI chief economic advisor said this, they would welcome interest rate rises as it would be a sign of returning to normality. They also as well boosted their economic forecast, predicting Britain would emerge from recession by the end of this month. They now forecast quarter-on-quarter growth of 0.3% for Q3 and 0.4% for the fourth quarter. As well from the CBI, they said the BOE may stop buying bonds when it completes its current £175 billion plan as the UK shakes off the recession. Taking a look though in terms of the market events that have happened so far today, has been quite busy on the economic front. Starting off, we have seen quite a stellar bid into UK and European equity markets this morning, all seemingly coming on the back of strength in the PMI manufacturing and service numbers for the month of September out of the Eurozone. First of all, it was France, where we saw a 19 and 17 month high in the manufacturing and service numbers. That moved through to Germany, and also the Eurozone numbers confirming a 15-month and 16-month high respectively in PMI manufacturing and service numbers. So again, that did prompt a sharp lift into equities and did put a bit of weight into European fixed income. Also, a major event from the UK markets has been the Bank of England minutes. They had a unanimous vote, although the two who did dissent last time as well, including Mervyn King, the governor, did say that they were still applying to an increase in QE. However, they saw it as more justifiable to stick to the plan at the moment. So again, unanimous 9-0 in keeping that current target to expire in November of 175 billion in QE. Rates, of course, they were unanimous on hold at 0.5. However, one of the most interesting comments, or no comment, was made in regard to that reserve requirement or reserve ratio in the UK Bank of England. And again, that did see a sharp bid go into the pound across the board. Cable shot up and euro sterling moved down below 90.00 handle, as well as putting a sharp fall briefly into the front month short sterling in the strip. Taking a look elsewhere in terms of equities, as mentioned, on the back of that strength in PMIs, European equities are trading up just around 1% or so at the moment. On an individual stock basis, worth noting for Vodafone, we'll be looking out for any updates from them today after FT reported they'll outline new services in which will aim to capitalise on the increasing popularity of internet surfing on mobile phones. For CAC, Total and Venezuela will invest $25 billion to develop an oil field in Orinoco region. Reports also suggest that Total is targeting a partnership with Brazilian company Petrobras. Elsewhere, Air France expects to reach break-even point at the start of 2010 and 2011 financial year. And UniCredit, they're considering a capital increase yesterday that could replace plans for €4 billion in Italian and Austrian state aid. Elsewhere, we've seen Munich Re, they've reiterated their forecasts, as well as Commerzbank just hitting the wires in the last few minutes, saying they intend to return to profit by 2011. Looking ahead then, in terms of the schedule, at midday, 12 o'clock London, we'll get the NBA mortgage app number. We'll then see Norwegian rate decision, where most analysts are expecting rates to remain on hold at 1.25%. That'll be due at 1 o'clock. That'll move on then to the Belgian business confidence number. Obviously, the market does take a look at that in reference to a pre-indicator for IFO from Germany. That'll be due at 2. No major data though from the US. We'll see the oil inventory numbers at 3:30, and then the focus will turn to the FOMC rate decision, and that'll be at 7:15 London times at 1:15 in Chicago. In terms of speakers, it'll be Bank of England's Barker just after 1 o'clock, and Geithner, as mentioned, he speaks at 2:30 this afternoon, so that'll be 8:30 Chicago time. As well, from the US, we'll be eyeing the second of this week's auctions. That'll be the 5-year note, $40 billion worth. And then the Bank of England will be conducting their final of the 3 reverse auctions for the week. They're targeting the 2013 to Sep 2019 maturities today.